This conference will now be recorded.
Welcome to this edition of Traders Exchange. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. So, I want to talk about just the reason that we're coming into the Elite package because Dave and I, and just throughout what we've been seeing going on, we kind of start to sat there and thought, what was the reason that it took as long as it does to kind of get to exactly where you need to be. Started thinking about it. We have our classes, we have our Traders Exchange, but a lot of the time, your screen time is developed by yourself. So the problem with that is that, especially in the beginning part of us being a trader, or starting to take our classes, is that I don't want to say is we know just enough to be dangerous, but it's almost kind of along those lines. So what the Elite package is actually going to be is it's going to take out basically doing this by yourself. Because our screen time is so important, but it's only important if we actually understand exactly what's happening. If a stock does something and we do not know why, it doesn't help us for tomorrow. Because you got to think about something. What's the most important part of being a successful trader? What is the most important part of being a successful trader? Consistency. It's day in and day out to be able to duplicate something that you're going to see over and over again. So by adding this Elite package, what's going to end up happening is it's not as much. So obviously we need our foundation. We need to start with classes. We have to understand kind of as a whole exactly how this is going to work. But the intricacies that we see during our screen time need to be thought about and reviewed over and over again, so that the fact that when the same thing happens tomorrow, we're able to actually anticipate it better. Okay, so I don't know about you guys, but I'm excited about this because this is probably going to be one of the biggest and best tools that we've ever implemented at ATC before. Because it's not only going to just involve the theory of understanding how this happens, it's going to make you and force you to get involved and see and hear from somebody that knows exactly what they're doing, exactly why this happened and exactly why we can expect it to happen tomorrow. Okay, so I mean, at the end of the day, we can get to being real good pretty quickly, based off classes and get our understanding of exactly what needs to happen. Okay, but until we really start obsessing about this. And like I said, going over a stock print by print by print, seeing the reaction, understanding why this reaction happened, we're never really going to get, again, to that elite level, hence the name Elite. But there's another big reason that this is going to, you're going to see the students in it, how they change and become successful so much quicker. It's almost like night and day. Now, obviously, it's not night and day. We're going to be, we're talking, a week or two. I want to bring up David A. for a second. I mean, just alone, okay, and this is going to lead me to my next point. Alone, in the past probably 2 to 3 weeks, I've seen, and I'm sure everyone has, just a huge jump in his understanding and ability to actually do this. And it's because of the work that's getting put in. Now, one of the biggest, factors in the Elite package that I'm very excited about is it's going to force you guys to talk. Because do I know what you're doing on the other side of your computer? No, I have no idea. I know what I teach you. I know what a correct trade looks like. I know how to trade, obviously. Okay, so one of the biggest parts about being part of this group is that you're going to be forced to talk and to give opinions and to give us the ability to actually fix you. It's almost like it's not it's basically like coaching. So what happens is that when you say something wrong, you might be sitting there and thinking, well, why are my trade percentages not going up? Because I'm doing everything right. But the thing is that when you're in a group of elite traders and you say something that's not right, you're going to be corrected. So it's going to give you the ability to really mold your thought process, okay, and do it extremely quickly. And obviously, we all want to get to where we need to be as soon as possible. So being able to understand that thought process and fix the little things you're going to see, it's almost like doing a journal, but having 10 people watching you do that journal at the same time. So Very, very excited about this. I mean, if you're serious about getting to where you want to be, because we're in June right now. Okay, how many of us have went from December, January to June, and we're still kind of in that same place? Okay, if you always do what you've always done, you always get what you've always got. So by us implementing this, it's really going to, like I said, it's going to be able to refine the thought process of our traders and get them to a point where they're gonna get to the point to be able to correct other people and have that same thought process, the thought process of how this works and how this works correctly and consistently. 1 through 4, again, are rules. Okay, we need rules. We need a baseline to be able to understand how we need to start thinking. But it's those intricacies that once we start adding into our tool belt that really get us from that good to great. So, like I said, real excited about that. But that's it for me right now. Let's get into our questions. So, Dave, you are up first. And I know Dave will be interactive. Hear you loud and clear.
Sweet, perfect. Really excited about that elite package. Message me if you guys are interested. I think there's one spot left, but nonetheless, into today's question. So my question is, how do we go about mastering transitional phases? So I'll kind of give an example here is we have prints at, this is uptrend. We have prints at a level on that uptrend. So we print at 3 levels. Above print personality suggesting the dominant market maker at those levels, major levels, are suggesting overall in a longer term time frame they're going to be looking to build. However, we have multiple market makers, 3, 4, 5 market makers on the shorter term time frame of things as reactions above those levels, under those levels, ballsy prints. So it's evident that the shorter term and the volume is there for continuation of the push before the overall dominant market maker builds. So I've been having some troubles trying to refine and really dial this in terms of the transitional phases. So I have troubles really defining when exactly that building period is over. So I've been looking through my journals previous month. This has obviously been something that's been at the forefront of my mind as of late because I'm trying to refine this. But I've seen periods where I would jump the gun on that first phase of selling because it's 2 phases, correct? It's that selling. We need to see that shorter term sell, and then we need to see them start entering the short positions. So I would typically jump in on that first sign of selling, and then maybe it makes a good 50-cent pullback or a dollar pullback, but then it stops there and then it continues higher. And then we see another transition there where they start selling off more, and then you start seeing some short positions kick in, and then you get that whole dominant market maker full pullback for them to build. So my question is, how do I improve my vision and patience with setups like this? And then my thought process with that is you truly need to have an understanding of how much shorter term buying is in the stock on the way up so you can see that money get out and not just be so locked into seeing that first little selling and then taking that trade, but really truly need to see and use it as almost a comparison to see, okay, is this enough selling relative to the short-term buying that was presented to bring the stock to the place it is now?
So coming into a transitional phase, so your thoughts is definitely a lot to, definitely the start of where your thought process is going to have to go. So the way that I kind of look at it is that we have our building prints and we have our trading prints. So a lot of the times what's going to happen is those supporting prints, and I've said this multiple times, and I really want everyone to get this drilled in their head, is that a market maker that's trading is not any less than a market maker that's building. They have different jobs and they're doing different things. So it has a huge deal with understanding the combination of those shorter term and how they're working with the people that are telling you that they're going to build. Because we see a lot of times that shorter term prints, they're giving you the ability to continue. And eventually, like you said, how do I get to the point where I understand that's going to stop? But so there's a big problem here. Someone gets into a trade. Can we really know exactly when they're getting out?
Not to the T, but we can have a relative, almost like a money flow perspective, right?
But sometimes. But what if they do it all in between prints?
Yep, that's very true.
So then now it's like, well, that guy's still in, but he's been out for let's say whatever period of time. So essentially, there's times where we can see where it looks like that, but for the most part, it isn't actually going to look like that because they're going to be doing things on the way up. They're going to be in between. We might see above, we might see below. So there's very easy ways for them to be able to hide that they're out of their position. And if they're hiding it, then we really don't know. So as everything, my answer is going to come back to your calculations. Okay, at what point? So forget about them actually getting out of the stock, but understanding how much money they actually need to make within your calculations is going to give you that idea of when that time, that extended or the it being an exception is going to be over. Understanding when it gets to a point, if there's no one left in it, that's the point where we're going to expect it to start coming back down, and we're going to be looking for that building. Not necessarily them having to get out, because if you remember, a number one trade is a transition trade, but it technically doesn't need selling in it. And when I say it technically doesn't need selling is because of this exact reason, is that we really don't know exactly when that person's going to get out. But what we do know is, to a really close generalized area, how much they're going to have to make on that trade. Perfect example here is going to be from this morning. It's going to be Rev. Okay, so we come up into Rev. Okay, we had ask prints that come in at the 3 level. Okay, and they weren't, anything that was too crazy coming back in. But as we're pushing, we got to 290, and 290 had great prints. Okay, and those 290 are telling us that those are trading prints. Now, they're a little bit longer term than off-level prints, but they're, less than actual controlling prints. So we understand this. Okay, so when it's pushing, we got to think the amount of prints that they had at 290, it was trading in 2-cent increments, was a bit above print personality. So in that case, how much do they have to make now? And my answer for you is going to be about 30 cents. It was about 1.5 levels. It wasn't quite 2, but it wasn't 1. Okay, so we're going to put it kind of right in that area. So that person at 290, once they pushed it up, when we see no one else continuing at that point, if I was looking to short this because it needed to build, and obviously you can't short it, I understand that, but we're using the theory. If I'm looking to short that, once I see that guy at 90 and it pushes up to that, to that 220, 230 area, that's the exact spot they needed to make money. Now, without anyone else coming in and showing us that buying that this person needs to make money too, which would give the ability to extend it, that's the number I'm looking for the number one trade now. And you might say, well, there was a couple last prints at 3. How come it didn't continue up? Because they all work together. This is a 15-minute fame, type 15-minute of fame type stock. Okay, so that person at 3 technically only needed to make about 20 cents. So if you look, the calculations were perfect. 90 to 320, that's about their 30 cents. Okay, a little bit less, 5 cents, but give or take, because it was, it was an in between. It wasn't 1 level, it wasn't 2, it was going to be right, somewhere in that middle point. So that's what we want to look for now, that transition period. Baba was another great example today to understand what was happening, and this is an easier trade than the other one, than the Rev trade, because of the fact Rev's got a lot more prints. But another spot for this is we got to look at what's happening as the stock is going up. Okay, so as the stock is going up in Baba, we weren't really getting any type building prints. Okay, until we had some that were coming in at 104, but it was kind of weak coming back into there. Now, as the stock is pushing up, the further it goes up, okay, without actual prints that are justifying that, or actual substance that's justifying that, I'm going to assume that it is completely hollow. So in a case like that, when we saw those 105 prints come in, that's a perfect time now. I don't need it to get far away from where it needs to go, because in this type of a number one situation, it's telling us that there's nothing there. They show big building. It has to happen now, because they never got to do anything on its way up, or they never showed anything. Nothing ever actually came in of substance that said, well, there's a reason for this to be able to just continue moving that the way that it is. So there's a few different ways that we're going to see it happen. It could be no substance, okay? And then it gets, obviously a psych level is always going to be one of the best spots for us to look at as a reason for it to, start coming back to that reality, okay? So it's a mix of either that or a shorter term, those supporting prints that are moving within the stock. Because when a trader's done, what do?
They
So
get
if
out
I
of
go,
position.
yeah, you sell. Do they care what happens afterwards?
Nope, not a care in the world.
No. So when it gets to that spot is now a high percentage transition spot. Do you see what I mean there? Because there's nothing There's nothing else that needs to happen. You know, we talk about bonus money sometimes. Well, if this would have pushed to 350, anything above 320 is now bonus. So at that point, even if even though it's continuing up, if there's nothing really that says it needs to be there, we are now in a perfect spot to look for the transition.
So it's more of the calculations being met for those positional or the traders that are trading those positions rather than the building positions being met, and the lack of new gas for that to show that continuation to start seeing that transitional period, not necessarily having to look and see that selling come in and see exactly that money flow come out, because like you said, there's many ways and method of them scaling out of their trade completely.
Yeah, so don't get me wrong, because it's great if you can see it coming out and you get that, but most of the time that's not going to happen. You're not going to get this clear. Someone comes in for 100,000 shares and then they get out 100,000 shares at their calculation spot. It just does. Unfortunately, that would be just too easy. And it does happen sometimes, but it's not going to be the consistent.
And if we do get that selling and it's overwhelmingly and obvious, that within itself would add up to our percentage, correct?
100%, no question at all. That's like what I'm saying. You're just have a higher percentage trade. You already had a high percentage trade. Now you put in that selling. Let's just call it 70. Now you put in that selling. You're going more towards the 75, towards the 80 point, because now it's matching exactly what the prince told you.
Yeah, because I think a thought process I've been not necessarily struggling with just contemplating is, okay, the calculations are met, but I'm still trying to look for them to get out,
which is going to be very hard.
Yeah, and then that's why it's been like, okay, I've been like really just sometimes I can see it, sometimes I can't. It's pretty difficult, but I think that you really answered it with so calculations are met, and then the lack of new substance or gas to push is the most consistent approach.
It's really the only approach that you're going to be able to duplicate tomorrow. Because think about it, you can't expect them to just come in with that selling and blatantly show you, I'm in my position, I'm out of my position.
Right, and that's something I've noticed as well. But it's obviously that in a case like this where you have a lot of shorter term positions, it's obviously different than a case like we saw in Baba today, where the substance was really not there and there wasn't many traders even trading it up to that cycle level. And then we got this building prints, and all we needed was a trigger down and really needed no selling for that whole move. And it met the calculations perfectly as 2 increments on the pullback. So that's a completely different type of number one.
But there's also the other type of number one, that number one coming in, the same number one. I want you to think about something. So in Rev, because of those 90 prints, okay, those 90 prints told us that if the stock is at 304 and it looks like it's a trigger down, is that okay to take? Is that a high percentage trigger?
So if they didn't make their proper calculations statistically, it's not going to be as high as if they did.
No, because it wouldn't make any sense. That person at 90, you would be telling, because the shorter term traders, if they don't make their money first, it would make, that would be a terrible trade. We were under the assumption that a market maker is always going to make their money. So if they got a 390 and then all of a sudden it transitioned and it changed, now the trade is completely over and they made 11 cents, that doesn't make any sense. You know what I'm saying? So with the way that we go about, the only high percentage trigger, it has to be around that 320, because now we know their trade was met. That knowing that their trade was met, now it might not be, but calculations, once again, anything could happen. We could get some prints that come in at 316 and all of a sudden change what the thought process is. But in that scenario, when we see nothing else coming back in, and now they're at their calculations that meet the amount that their prints told us that they need to make, that's when we get our high percentage triggers down. Now, in a case like this too, is that if we got, let's say, huge ass prints at 3 and they tell us it needs to build, well, what actually needs to happen first?
That short-term money be pushed first.
Yeah, so we got to see that short-term money. So in a case like that, we can't just see 3 ask prints and all of a sudden take a short trigger down as if they're going to build right off of 3. When we talk about the Baba trade, because there was nothing underneath, there was no actual substance that was coming there, there was no shorter-term money that needed to actually make their money first. The second we see a 105 prints, high percentage triggers there. So if we see a trigger, boom, that's it. We're going to take that. When in the same case, if Baba, let's say at 114.92, okay, told us they needed to make an increment, we see those 105 prints come in, that instant trigger isn't as high a percentage. We
And our
want to see that
expectations would
stock.
change.
Exactly. So we want to see that stock, let's say 50-cent increments. We want to see that stock get around 115.40 before we actually get the high percentage chance of the transition back to the building.
And that shorter term position might also, pull back 20, 30 cents and then make that move above that psych level as well. So you could get shaken out under when in reality they're just quick pullback for them to make money to push above.
Of course.
But
So
yeah.
again, it's funny. Everything always goes back to calculations because we don't know exact. So what we have to do is we have to see what market makers, the whole rules, everything is built off the increments and how much market makers need to trade. We know that's true. So based off these increments, it comes back down to our calculations. Okay, it doesn't mean that they have great prints at 14.92 and then 15s. Doesn't mean it can't just come back down. But is that our highest percentage trade?
Right, that makes complete sense.
And we want to base our trades. You know what? Guess what? It hits 15 on the ass, but it told us it needs to go to 15.40 for them to make 50 cents from 92 to there. So if it starts going back down, that's not our high percentage trade. And you'll see a lot of the times you take that number one as it's going to be the transition. And like you said, small pullback from those 92 prints. And it looks like it's the transition. And all of a sudden you get shaken out. Stock runs to 15.40 first.
Yep.
When waiting for that perfect trade and sniping that trade coming to you, it comes back down to the calculations.
Yeah, once you have this understanding of the game, it gets real fun after that.
Oh, no question. Because there's no thinking involved. Okay, this person needs to make that. If they don't make that, then you know what? I don't have a great high percentage trade.
That's all it comes down to is those calculations.
Mm-hmm. Yes, sir.
All right. Thank you, Rich. Really appreciate that.
Great question. Okay, let's see what we got next. Okay, this is a chart from AMD on Friday, 6/10. Could you kindly go through each comment I have made about the prints and triggers and confirm if my understanding? Oh, lordy, lordy, lord. I wish you guys could see this. I don't know how to get it on my other computer, though. Dave, could you copy and paste that into Discord for me?
Yeah, I think he might have posted that in the night shift channel, but I'll post it again.
Well, I'm talking about the actual. I mean, this is. Well, we'll try to do it. Just give us 1 second. Oh, can't open the image on your end? Okay, because I see it. Dave, we're going to save this one, and we'll do it first thing next time. See, the thing about this is that I wish everyone could see the picture that I'm looking at. It's a little bit, because I can't switch pictures from computer to computer. I can only pull it up here. We're going to save this one because this is going to take more than an hour. Well, this is going to take about an hour, but it's every major type prints that we saw coming into here for AMD, and it's just the thought process, but I will make sure I get it into the chat, and then we will just so everyone can see it. Otherwise, me talking is just not going to really help. So we're going to skip this one for this week. Although the notes on that, it's definitely, Dave, that's very detailed. Okay, how can I tell when a burst of prints is taking profit or covering? When this happens, these prints are basically noise and should be ignored. Correct. So that's an interesting thought. Now, there's certain ways that we could definitely expect something to be covering. And it really comes down to if I see buying on a downtrend the first time, at that point, I'm expecting that to be covering because is more than likely if the stock is going to go back up. So if someone's going to come in and buy on a downtrend for the stock to actually go up, that means that they know it's going up, which means that the person that's trading it knows it's going to go up. So when I first see that first thing of buying, I take that as covering versus the second phase is when I can really look at it to start being buying. But I want you to understand something. And I know, you know what, we get real advanced here because eventually you need to be able, to, again, going from good to elite. Okay, it's something that we definitely want to be able to know. Now, can we ever really know? Not really, but there's certain situations where it really is a strong possibility that that's going to be happening. But I want you guys to think about something. Does it matter if somebody's covering a huge amount, okay, of shares versus what the stock is going to do? What does someone covering a large amount of shares mean to the overall of the move? Okay, or buying, covering, whatever, let's just say ask Prince. Does it really matter? Because what does it tell us if someone's coming in? Well, they definitely know something, okay, but what do they know? What do they know? Trend is over, not necessarily. Because remember, just because you cover, some of these positions these guys got out there are just, astronomical. So they could be covering a lot and it still only be, half their position or quarter, whatever the number be. Yeah, we have limited room. The move down isn't ending right. It doesn't necessarily mean it has to be ending this second, but it means it's coming towards an end. Okay, so now what do? How do we know when that end is going to start to come? I always tell you guys, okay, am I worried about selling in a stock when it's moving up? If I want the stock to keep going up, am I worried about selling? What am I worried about? New buying. I want to continue to see new buying. People are always going to sell. We're going to see that constant, but I'm worried about new buying. So now let's go back to exactly what kind of the question that Dave asked and understanding, number one trades are kind of mastering that transitional phase of a stock, coming down or a stock going up. What do you think I look for to know when we're at a spot where it can transition from that short back to going up or that downtrend back to giving us that move up? What do you think I look for? A lack of new selling, or more importantly, okay, the selling that I see hitting the spot they need to get to make their money. Okay, that's what I'm looking for. These transitions of knowing it going up and down, and I think this is something that if you focus on, guys, it's going to really help you manage and hold on to your trades better. Okay, because there's no thought involved in what I do and what I teach you guys. So when a stock is coming down, if I see buying, okay, there's a big difference between the selling showing there's more room and seeing buying versus the selling showing that it's at the spot that person needed to make their money and seeing buying. Do you see the huge difference there? Because buying with new selling is showing me, and when I say selling, I'm talking about the trading selling, those traders out there, off level, fives and zeros, not at actual major levels. I mean, you guys hopefully know what I mean. Okay, but coming into that, these calculations stop me from thinking. This has helped me go from having 15-cent winners to $+ winners. And I'm telling you, it is it's such a big difference because I don't think. Again, we're following, so we're letting them do all the thinking for us and we're acting accordingly. So it comes down to if you're really looking, because not for nothing, if you see buying coming in on a downtrend, what's your mind thinking? For Gary to ask this question, what was he thinking? How do I know when it turns around? Yeah, so how do I know when it's time that I can actually take a number 3 trade, or depending on what the situation is, but most likely a number 3. But it comes back down to those calculations again. Again, I'm going to say it, and I want you to really soak this in. There is a huge difference between buying when the selling says on a downtrend. Keep in mind that we're talking about a short right now. There's a huge difference between seeing buying and the selling still having more room versus the selling not having any more room and seeing buying. They are we can take them as two completely different things. Because the first time, so let's say the selling tells us that we have another dollar. I'm just making up numbers. But if the selling tells us that we have another dollar and I see buying coming into it, do I really care? I mean, unless it's something that's just like absurd. No, I don't really care at that point because the selling still has the ability to continue on its way. So that buying doesn't mean much to me. So you might get caught up, and this is something because we talk about the two phases. Okay, if someone's most of the time we're going to see covering first, then we're going to see buying. That phase 1 of covering, then that phase 2 of buying. Okay, but if the stock still has the short-term selling to continue on its way, and you see buying once and then buying again, can we take that as a second phase of buying, which is telling us that the stock, or a second phase, which would be buying and telling us the stock is going up? We can't. But when the stock is now at the point where our selling shows us they're at the increment that shows that they've made their money now, okay, and then we see buying one phase, covering one phase, and then buying in a second phase, that's when our time frame really starts to tell us we're getting close. And that's a good spot to actually look for the trigger back. Same exact thing as looking for that number 1 trade, or the REV trade, or that I used as an example. It's the same exact thing. It's our calculations. Our calculations are what tells us how to react, what the stock is going to do, when we can be looking for a certain situation. Okay, you'll see your percentages skyrocket just by thinking in this way. Because again, it takes the thinking out. When a stock is in a downtrend, if you're sitting there and just waiting for a trigger at any spot, okay, that takes a lot of thinking, doesn't it? It takes a lot of moving your orders, and sometimes you have to do it, okay? But there's always a better spot, and in this case, it's going to be when we're looking for, and again, it's a transition. You're transitioning from short to being able to look to go to that long side. And it comes down to your calculations. If you don't know your calculations, rewatch the last class, the last round of classes, because the calculations are going to be everything. It gives you the ability to understand where things are high percentage to happen. Otherwise, we're just guessing, and then we're taking what we think are triggers because they have price action and volume and keep getting shaken out and saying, well, what am I doing wrong? And I guarantee you, if you really dig into your trading, you're going to find out that that's probably one of the biggest things that you are doing wrong. All right. Next question. Hey, Rich, one thing that I can't quite bolt down is managing my expectation on how much off-level prints need to pull back before it's go time. More often than not, I'm expecting a bigger move down from the off-level ask, and I wind up missing the actual triggers. Like today with those 62.52 ask and Oxy around 950, given their size, I was expecting a pullback closer to 62 to then look for a trigger. They would wound up pulling back about 20 cents and triggering my entry with 62.77, which was a little higher than I would have liked. What do you look for in these instances for the best time to enter that possible? So again, it's going to come down to how quickly can they build in that situation. Okay, and I'm not going to answer this full question because you're going to have it live tonight, and I'm not going to do exactly what's going to happen tonight because you're going to get an even more in-depth breakdown and be able to watch the exact prints as it's going on. But I want you to think about something. Okay, so we're talking about right back over here. Okay, we come into 62.52. Okay, stock pulls back again about, I think it was about 30 cents. Yeah, it was about 30 cents, give or take. Either way, it still wasn't as much as what the print personality shows you. And then we end up getting this beautiful trade that, that pushes into that 63.50. That's probably where you would have got out most. Your runner might have been able to get to that print line. The prints were a little bit sketchy at that point. You would have had, definitely a smaller position. But I want you to notice something. Okay, as we're coming up, okay, to that 6250, what do you notice about volume here? What do we see there about volume, Matt? So it's consistent, not the word I'm looking for, but definitely a correct answer. Look at the whole day. 2 minutes after the market, we start coming down like this, right? Were they able to build on volume like this? No, so I don't want to say it's not, definitely not unsustainable. They were able to build, right? No question, with volume like this. So when we come to 6250 and we see volume like this, how much quicker can they build? Extremely quick. Okay, and having a combination too, because it's not like we were talking about it was at 52.55. We're talking about 52.52. Okay, so what does that tell us, just those prints alone? 52.52, I know they're real big, huge off-level buying coming into that. What does that tell us alone? Quick time frame. Okay, at that point in time, what were the increments that it was trading? 50 cents, right? Okay, what were the prints at 52.50? I mean, yeah, but they were okay. So at this point, what are we looking for? Because I guess what, this was not an easy one. Okay, now not for nothing, I'm taking that trigger all day long, and I know it did take a little bit, but what am I looking for in this case? Because volume's really high. Okay, volume is really high now. We see it continuing. So as it's going down, the volume's getting consistent, but consistently sitting there and sustaining everything that we saw. So what am I actually looking for? I'm going to look for a spot. Where do I know that I have a strong level? Yeah, we have an orb right there. So I know the calculations on this weren't easy, but 5250 alone tells us that it needs to happen quickly. Now, think about it too, is that if these same 5252 prints came in at 11 o'clock, would we expect the same thing? Would an orb line would it have been acceptable at that point? No, because they're not going to be able to build like that. But at that point, we had our building coming in. We know how that it is a very strong level that's sitting under us right here. Okay, where our orb line is, because that's where it pushed to right in the beginning of the market, let's call it 62.20. So when it came down to there and we got our trade up with having the ask prints at 52.50, so we do have controlling, and we're having the ask prints at 62.52, 62.52. Was this a high percentage trade? Well, let's think about it. Do we have full 60% in our prints? Absolutely. Was the trigger 10%? It was. So right there, we're at 70. Okay. Do we have supporting prints that came into it that matched up exactly? Well, I mean, not only did you have supporting prints, but he was trying to take over the main part of the play. Okay. So we have those. So those supporting prints, now we have two market makers aligned, don't we? Can we give a percentage to having two market makers aligned? Because our prints already have 60. Okay, our prints already have 60%, so we're not going to add more to our prints, but now we have two market makers that are aligned. Two people telling us the same exact thing is going to happen. Okay, so from there, now we're at about 70, let's call it 75. Now, a trigger off the orb line. Is the orb line give us a percent? What percent does an orb line? About 5-ish. So now we're at 80%. So did the calculations work out perfectly with how much you would have expected it to come down? Not really. And it's not that it's not really, because it did. But think about the trade off the orb line. And we could add a few, I'm sure we could, if we sit back and we go over the prints from this morning and the fact that it went down really on not much and blah, 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 and we add those other things, we're probably over 80%. So the actual trade itself was really high percentage. You're going to have trades out there, and guess what? This is an advanced trade. I'm not gonna, just say, well, it was perfect. It wasn't textbook, but it was an extremely high percentage trade. And if we're putting together our percent, because when we get into a trade, okay, we know everything about between 0 to 10%. We technically don't know what our trigger is until we click the button. Okay, that's why we wait for a 10% trigger, because now we know if we just have prints and we just have a trigger, we're at about 70%. Okay, so understanding the fact, if you started aligning in your head what these percentages were, we have a really high percentage trade that came into it. It wasn't perfect by no means, but it was justifiable by percentage, and not for nothing, but the volume factor in it told us they had no problem building. They were building better during that point than they did when they were bringing the stock down for the original move down from the market. There are such things as high percentage trade guys that don't fit perfectly. They happen all the time. But in order to get there, we have to have our calculations and be able to understand when the percentages start to add up. So even though, like I said, I agree with you, and you got a little bit of a late entry, in my opinion, you paid a little bit more for extra confirmation. Is that a terrible thing as a trader, to pay a little bit more for extra confirmation? No, not at all. But when you have an orb line sitting right there, it's obviously a spot that we got to look at, and then understanding what the possibilities are. Again, if you're drawing this chart in your head, we have to think, because the stock needs to come down first from those. But now when we draw our chart, what's a likely possibility? Because as the stock's coming down, okay, is it going to break the orb line without selling? How do we break that orb line? More gas or jackhammer prints? Okay, we don't see those. Gives us a 10% trigger up. Very high percentage trade. Just wasn't textbook. And don't get me wrong, it was textbook for exactly what they were showing to do, but the actual pullback itself, because then it did exactly what it needed to do. How much did they need to make? Stocks trading in 50-cent increments, how much did they need to make? At least $1. Technically, they needed to make more than $1. And if you look, they did. They got it up there to 64. But do you see how that works? So yes, that's a rough one. But the volume itself being able to build. And again, I don't want to hit this too hard, because this is going to be a great lesson as you're watching the actual prints and watching it in real time today in the night shift. You'll be able to go more, but you got to think, and again, I'm going to go back to my original point. I don't want to talk a lot about the actual trade itself, but you have to think, if volume is getting higher, what does that mean about building? It's a lot quicker. And if it's going to be a lot quicker, can we expect the full calculation of a pullback? No. Now, was 30 cents enough? I would have liked to see 50, because technically it probably should have been more than 50. I would have liked, but it's, you know what? It did what it needed to do. And if you look, the actual prints themselves, they made their money. And isn't it really crazy how Dave just asked a question about how stocks end up coming back down afterwards? Okay, their calculations really, if you look at those 52 prints, probably fall closer to 3 than 4, but probably right around 3 calculations. Because 2 would be, let's say, double. It was over double print personality. Okay, and if you look, 64, what happened at 64? Well, we end up starting to come right back down to those prints to where they showed us to build. Isn't that crazy how the calculations work perfectly when you're looking for that transition? So a little bit of the other lesson into what we see right here. All right, any other questions? All right, guys, well, that's it for me. I will talk to everyone in the chat, and happy trading.